All right, guys, welcome back. The market is starting to crack, and small caps are right at a key level, and most people are completely ignoring it. If you trade momentum names like I do, SPX and IWM are the two charts you need to watch right now. Before we jump into the charts, markets are dealing with rising geopolitical tension pushing oil higher, and inflation expectations starting to rise again. That matters because higher oil feeds into inflation, and if inflation keeps elevated, rate cuts get pushed out. So overall, not a great environment for risk, especially small caps, which are more sensitive to rates and liquidity. Let's start with SPX. SPX tells you if the market is actually healthy, and right now it's no longer in a cleanup trend. We're starting to see lower highs form, which is usually one of the first signs that momentum is fading. Price is under pressure, and the big level I'm watching is around 6630. That area acted as key support, and yes, we did get a bounce, but it was a weak bounce with no real follow through. And that's important because strong markets don't hesitate at support. They react fast and push higher. When you don't see that, it usually means buyers are starting to step back. So, what this tells me is simple: the market isn't breaking yet, but it's definitely losing strength. And when that happens, you start to see more chop, more failed breakouts, and less clean trend. And that's exactly what we saw yesterday and today in small caps. Now, why does that matter? Because SPX gives you the overall direction, but IWM tells you how aggressive traders really are. On IWM, the key support I'm watching is around 245.5, as we can see here on the chart. That level got swept, price bounce, and now we're hovering around the 250 area. So right now, IWM is basically sitting in the middle of that range. That's where you're seeing dead stocks and no follow through right now. There's no clear indication, so momentum just keeps failing. And if you've been trading small caps lately, you've probably felt that. Setups look good, but they just don't continue. So here's how I'm thinking about it. If bulls keep IWM roughly around 250 to 252, then there's room for a push back toward the 256 area. That would signal some strength coming back into the small caps. But if IWM starts slipping back below 248, then we likely revisit 245. And if that level breaks, the downside can open up fast towards that 228 area. And small caps tend to move fast in those conditions. So the way I'm looking at this is simple. SPX is the filter, IWM is the accelerator. If SPX holds support, then small caps can stabilize and potentially move higher. But if SPX loses that 6630 zone, then IWM likely leads the downside. And that's when you start seeing sharper moves lower in small cap names. So the real takeaway is this: the market isn't fully broken yet, but it's definitely not healthy. SPX is sitting on a key level, and IWM is at a point where small caps either recover or start opening the door to much more downside. So if you trade small caps, this is the area you need to pay attention to because when IWM moves out of this range, that's when you start getting real opportunity and or real downside. And that's why I want to keep focus on day trades primarily or plays that last about 2 to 7 days. So I just wanted to give you guys a quick update on the conditions right now. Now, before we wrap up, I want to quickly go over a few trades that I took and alerted recently. First is JBA. I alerted this one yesterday in after hours around $3.35, and today it ran all the way up to 427 in open market. That's roughly about a 27% move from the alert. It hit both my targets at 380 and 411, so that really gave us a solid cushion for the day. There's still potentially some more room left on this, with the next key levels around 460 and 488. But overall, this was a clean move and a good example of follow through when momentum actually works. Next is FLYX, FLYX. This one I alerted it today at 274, and we did get a nice move up to about 312. So there was opportunity there. But my original target was at 352 plus, and we never got that continuation. So I ended up taking a loss here for about 10%. And then we have CYN, SIN. I alerted this one yesterday around 268, and we did get a move up to about $3. But again, my targets were higher, around 340 and 4 plus. And after that rejection at 3, the stock ended up announcing an offering. So that completely killed the momentum midday. So this is just part of the process. You're going to have wins and you're going to have losses. The key is that everything is planned out ahead of time: entries, targets, and stops. All the receipts are in the Discord, so everything is transparent. And my goal is always to take emotion out of trading. Once the levels are set, I stick to them because that's really the advantage of technical analysis. You don't have to react emotionally in the moment, you just execute the plan. And then there's also why understanding something like IWM right now matters so much, because when the market is in this kind of environment, follow through becomes a lot harder to find. So that's it for today, guys. I'll see you in the next one.